Welcome to Business Talk. South Africa's risk landscape is shifting faster than I think many businesses can adapt, from climate shocks, continued power instability, to the growing protection gap that leaves, I think, many exposed when disaster strikes. To unpack what this means for business resilience and how insurance is evolving to meet that challenge, I'm joined now by Dini Nondumo, who's head of commercial insurance at Standard Bank Insurance Limited. Dini, great to chat to you. And we know that the risk environment is intensifying. As I was chatting to you off air, I was just trying to get homeowners insurance on a thatched roof, and it was almost impossible. As someone on the front line of assessing and managing these exposures, how would you describe the current risk climate for South African business?
Thanks, Michael, and thanks to your viewers and listeners, and thanks for this opportunity. I think the risk climate. I'll start at a macro level, global level. I mean, we do live in a global society. I think the risk climate and approach to risk has really significantly changed, especially over the last 10 years. And I think a lot of this has been driven by all the large scale environmental events that are happening more frequently. I mean, in the South African context, we'll talk of the KZN floods. We'll talk of the Knysna fires. You go a little further abroad, you talk about the earthquakes in Turkey, the Australia and the US fires. I mean, all of these issues are really impacting the risk environment globally, and therefore how we interact with risk as a country, as an insurance business, and of course to our clients as business owners, and how we should take it in. And I think the key thing, risk and protecting your business has now almost become a critical line item in your balance sheet for any business owner, for any homeowner as well. You've just described your personal event as well. So I think the risk environment and landscape has really forced an integration of risk analysis and awareness to form an integral part of any business plan and business and economy essentially to thrive.
And it's because things are changing at such a rapid rate. And we know South Africa, is warming at twice the global average. And we are seeing more frequent and severe weather events. You just look at what happened in KZN, the flash floods, the landslide events that triggers. How is climate change starting to reshape insurance claims from where you're seeing those come in at Standard Bank? And what does this mean for business continuity planning?
So, I mean, over the past 5 years, we've really seen an increase in storm, flood, and fire-related claims. Very massive increases. To your point, we're seeing them more frequently. And, storms alone now account for nearly, I'd say, 1 in every 3 property claims that come through. Weather-related claims such as storms, hails, floods, in 2024 alone, those accounted for 41% of total claims. So it really is becoming quite an impactful thing. And it's a wake-up call, I think, for both insurers and business owners. It means that we need to move to a more proactive model as opposed to a reactive model. And this, by and large, is going to be data-driven. We've got all the data as insurers. We've got all the data from weather gatherers from all over the world. And I think we need to utilize this data and have a data-driven forecasting in terms of how we then protect our assets in the event that these events take place.
And you talk about that data. It's remarkable, the breadth and scale of data we have now. We've got satellite data. You can go back and integrate all of these data sets to provide a much more holistic picture of the likelihood of the risk and the scale and the intensity potentially. And I mean, we often talk about the protection gap, though, in insurance, that space between insured and total economic losses. How big is that gap in South Africa, and how does it affect both individual business resilience and the broader economy?
Oh, unfortunately, it's a massive gap. That's the only way I can describe it. Perhaps zoning in on the KZN floods that happened a few years ago. We all know the damage post those floods was 62.3 billion rand in losses. However, of that 62.3 billion rand in losses, less than 50% of those were insured, meaning more than 50% were uninsured. And that's the large scale damage that took place. And of course, as we know, it was devastating to the economy, especially in the SME market, because what it essentially means for a small or medium-sized business owner who's uninsured, after a catastrophe like that, without the insurance protection, you are essentially, your livelihood has come to an end in as far as that business is concerned. And it becomes vitally important for us to close this protection gap because of the ripple effect and ramifications that it has. It starts at the business level, the business owner, the employees of that company. There could be 30, 40, 50, 100 families relying on the salaries of those employees. And that's the ripple effect. It's not just about the business owner's property, but those 50, 100 to 1,000 mouths that those doors remaining open impacts.
Yeah. I mean, we're talking about deepening financial resilience, societal resilience. And I know traditionally insurance was seen as something of a reactive product you claim after a loss. But that model does seem to be evolving thanks to the data that you've now got at your disposal. How is Standard Bank Insurance reimagining its role to help a client better anticipate and, importantly, mitigate risks before they even occur?
Well, specifically at Standard Insurance Limited, our goal is to make insurance a strategic tool for continuity and foresight, not just for recovery, as you've pointed out. I think the short-term industry at large, is evolving from being a payer of claims and wanting to play a more pivotal role as a partner in risk management. And I mean, that shift is quite fundamental to future-proofing not just the SA business owners, but the South African economy at large. So, we're increasingly leveraging technology through predictive analytics, satellite imagery, risk modeling tools and data, as we spoke to earlier on, to heighten and make our consumers more aware of what that data and how that data can help them in future-proofing, protecting their businesses, and just equipping themselves to be in a better position to recover when an event takes place.
Maybe we could just click on that for a second, because I find it fascinating. You mentioned satellite imagery, predictive analytics. We've got a huge thunderstorm overhead here where we both are. I think you're in your Rosebank office. I'm in Parkview. We're seeing all of this technology. We're seeing AI. It's the big buzzword, artificial intelligence. How are these technologies actually changing the way that Standard Bank Insurance identifies and prices and manages risk locally? Maybe you could just share a few examples.
So the one key way that it's helping is that data and predictive analytics. The more data we get from the client itself, we can actually help the client better manage their risk, especially from an advisory piece, through our brokers, through our advisors, both within the insurance business and the brokerage partners that we do utilize. And the value of that predictive analytics, you think of I'll talk of a property developer who's looking to develop a townhouses somewhere in Johannesburg. We can, through historical data that's been plotted into those programs, we can then advise accordingly, even before construction, that perhaps you need to move. By way of an example, you are in a hail belt. Are you sure that the construction methods that you're going to use for this development of yours are going to be able to withstand the frequency of hailstorms that come through this belt itself? And from that ground up advice, then the developer says, all right, let me move rather and adjust my plans to move to that particular area. And once they are in there, we've of course got all of that analytical and historical data from there to then better price their risk and advise them in a proactive manner what things they need to have in place in order to manage that risk once the construction and the building is up. Yeah, I think that's one way or example I could utilize there.
But it just shows you how strategically the conversation is shifting, because often you would have thought about insurance maybe at the back end of that process. Now you're using it right at the front end of your strategic planning. So you're going to approach the insurer, you're going to say, right, what would it look like given the risk profile in that area? And it does change the model, I think, quite significantly. You've led very diverse teams across financial services, agriculture, renewable energy. From that vantage point, what do you think business leaders most underestimate about risk culture and resilience?
I think what they most underestimate is the impact it can have in how you future-proof your business. To your point earlier on, if you engage the risk profiling of your business, the line of business that you want to enter into upfront, you can better plan all the way through to your balance sheet planning, your budgeting. You know, it is better to be prepared upfront than to try fix afterwards. You know, we like to say that when we come in and we have settled your claim, we want to put you in a position that you were in beforehand and put you in a better position to move forward from that disaster in itself. So I think it becomes quite important that the conversation is proactive as opposed to reactionary.
So given that, I mean, if you could leave South African business owners with one clear priority for 2026, I can't believe there's only really a handful of weeks left until we start putting up the Christmas trees. But something they really should be doing today to build that long-term resilience, what would it be?
Pick up the phone, call your broker with immediate effect. Call your broker to come and do an assessment on your business. I like to say you don't know what you don't know. Let the expert come and show you what you don't know. Frequently have conversations with your advisor. Let them come. I would advise that twice a year at a minimum, you have your broker send through an assessor to come and look at your structure, come and look at your business. As your business is evolving, come and look at what new risks that weren't there 3 years ago, but as a result of how your business has evolved, they'll be able to pick these up on an ongoing basis and therefore also accordingly advise you on how to work with those risks. The risks will always be in a business itself, but it's always great to have the best advice experts. If you are in the business of logistics, that's your business. You're not in the business of risk. Get your advisor who is a risk manager and an analytical person in that relation to come and help you. You don't know what you don't know. So speak to your broker more often.
Yeah, I think that's great advice. And also, given just how dynamic the risk landscape is, it's changing all the time. So you may have thought, well, I had a conversation a couple of years ago with my advisor. It's something that you have to do regularly, given the pace of change that we're seeing. Dini Nondumo, thank you very much. Head of Commercial Insurance at Standard Bank Insurance, reminding us that resilience isn't built in the calm. It's actually forged in how we prepare for the storm as the storm breaks overhead, I think. Quite fitting. Thanks for your time, Dini.
Thank you very much, Michael. Cheers.